You mean in the office? Tell me when we're live. Right now? Tell me when I'm supposed to go on.
Oh, yes.
Ready? Yep. Are we ready? I'm excited to get this game started. All right, everybody, we're excited to get this started, but we're going to give people a few minutes to be able to join us. So we have people who are joining, and we're welcoming you to the Liberty Text Live. We'll get started here in just a few minutes. So I think we still have people joining us, so we're going to give them just a few short moments to be able to put in their questions, and we'll get started here very shortly. Thank you for your patience. Welcome to Liberty Text Live. We're very excited to be able to answer your text questions here today. So we're going to give again a little few short minutes for people to join and start submitting their questions. And I'm very excited to be able to give you the answers that you need for this tax season.
We've got North Carolina, says hey from Liberty, Texas. Fairfield, Ohio.
Well, hello, North Carolina and Ohio. I understand we got people joining us there from there. So welcome. All right, I think we're ready. Well, welcome everybody to Liberty Tax Live. My name is David Delaney. I'm the Senior Vice President of Compliance and Enterprise Support here at Liberty Tax. And really, that's just a mouthful for people to think of me as the local tax expert, which you can find at all your Liberty Tax offices nationwide. And so I'm here to answer your questions about anything tax. And that's what I love. I actually am what is called a tax junkie or a tax nerd. I actually read the Internal Revenue Code on a regular basis. I look at tax returns and I see the story of a taxpayer's life in 1 year increments. And I really love assisting people with their tax questions and helping them pay no more than the amount that they owe in tax, not a cent more, and of course, getting the maximum refund that they can get. So I'm here to answer your questions, so let's get started. How may I help you today? Some of the things you may be thinking about as you're typing in your questions is, when does the tax season start? Well, the tax season is starting already, but the IRS will start accepting and processing returns starting this next Monday on the 27th of January. And they're going to be accepting returns all the way up to the filing deadline of April 15th of this year. Now, of course, there's taxpayers who need additional time, and of course, they can apply for an automatic 6-month extension and have until October 15th to file the return. And there's some unique circumstances where taxpayers get automatic extensions based upon their the type of taxpayer they are or where they reside, such as military members serving overseas or U.S. citizens living abroad. So those are the important dates that you need to think about for the tax season, is that it is just a few short weeks from January 27th to April 15th to get your taxes filed on time. And that's an important thing for all of taxpayers to do, is ensure that they submit a true and accurate tax return to the IRS by the filing deadlines to avoid those costly penalties and interests. So I'm going to go ahead and ask my moderator here. Do we have any questions?
Not just yet. So we're going to start talking about. Oh, we do have a question here. It says President Trump is saying he will do away with federal tax. What effects would that have?
Okay, so we just got a question saying that there has been some talk during this last campaign season about taxes. You may have heard the President Trump talk about how there's not going to be any tax on tips, or there's no tax on Social Security, there's no tax on small businesses. Well, let me clear some things up. Is that the campaign is a promise, but it's not actual tax law yet. And as of right now, there's still taxes that apply to tips. There's still taxes that apply to Social Security, and there's still taxes that apply to small businesses. So the great thing about coming to a Liberty Tax office is that we can help you as your local tax experts understand what is the tax law currently, but also to be considerate of those tax law changes that can happen once Congress starts passing legislation and once President Trump signs that. So that's the great thing about having a Liberty Tax office in your neighborhood is that they're paying close attention what the tax laws are, as well as the legislation that could affect the tax laws and how it can impact your specific facts and circumstances. And that's why we're your local tax expert. Thank you for that question. That was a great question.
Okay, looks like that's all the questions we have right now. We can go ahead and discuss some of the hot topics.
All right. Well, I was told that I can discuss some hot topics. To me, everything tax is hot. So let's start with talking about some of those really exciting tax credits and tax deductions that are out there. Well, first of all, let's talk about what a tax deduction is and what a tax credit is. A tax credit is a $1 for $1. If you qualify for that tax credit, it will take away $1 for every credit that you receive against the tax that you owe. And what's great about that is that if you qualify for a refundable tax credit, you may get money back even if you owe no taxes at all. So that's a great thing if you can qualify for those refundable tax credits, or any tax credit is really helpful for your tax burden. Additionally, a tax deduction is a deduction of your gross income that the tax rate applies to. So you can think of like a tax credit is worth $1, but a tax deduction is worth about 10 cents or 25 cents on the dollar, depending on what tax rate you're in. So both of those are really great in order to reduce your overall tax liability. But what you can count on is that every time you come into a Liberty Tax office, your local tax expert is going to be interviewing you and ensuring that any deduction or credit that you can claim on your tax return is applied to your tax return, so you get the maximum refund allowed. So that's one of the first things I want to explain is what is a tax credit and what is a tax deduction. Let's talk about what some of the tax deductions and credits that are out there. One of the most exciting tax credits that are out there is the earned income tax credit. You may know this is also known as the earned income credit. And what this credit does is it assists the low and moderate income taxpayers and their families with their financial well-being. It's a wonderful credit in which you can, if you're qualified to claim it, you could earn an up to $7,830 for tax year 24. You could earn that as a refundable credit for you and your family if you have the requisite amount of income, the amount of earned income for the year, as well as any children that can be qualifying dependents, up to 3 dependents on your return, that could help maximize the amount of earned income tax credit. So that's a great credit to help out with low and moderate income families. And for us here at Liberty Tax, that's a great honor for us to be able to secure that refundable credit for you if you're qualified. In addition to that, the child tax credit is also a very popular credit. That's a credit up to $2,000 per qualifying child. Now, a qualifying child is a child that's less than 17 years old and also lives with you more than half of the year, is also a family member or relationship to you, and also that you provided more than half the support, and they have a Social Security number. So there's qualifications that apply to every tax credit that's out there. And what's great about that, thank you. No, I'm okay. Thank you. What's great about that is that your local tax expert in a Liberty Tax office can help you understand what those qualifications are for the earned income tax credit and the child tax credit in order to get a maximum refund for you. Now, tax deduction, there's deductions for things like giving money to charity or tithing to a church. There's deductions for owning a home if you have a mortgage and you pay mortgage insurance and, or I'm sorry, interest, and also pay property taxes. And deductions have certain qualifications that go along with them as well. But as long as you have qualifying expenses and meet the requirements of those deductions, you can apply that to what's called a Schedule A itemized deduction. And what happens is if you have enough of itemized deductions that are more than the standard deduction for your filing type and status, then that would mean that you get to take those deductions. Otherwise, the standard deduction, which applies to your filing type, is what most people are going to be able to claim as a deduction. So again, credits and deductions are great things that you can qualify for on your tax return and help you lower your tax burden and also maximize your refund. We got a question?
Yes. SoFlo Luxury Booking wants to know who needs to file a tax return.
Great question about who needs to file a tax return. Well, first of all, did you earn income last year? Well, if you earned income, you may consider filing a tax return. If you had, based upon your filing status, if you're a single filer, meaning that you're not married, then if you had income over $13,580, that means that you have to file a tax return. If you were self employed and earned over $400, you're required to file a tax return. If you had money withdrawn from your paycheck by your employer, you may want to consider filing a tax return even if you don't have income over the standard filing deduction amount or as a self employed because you want to make sure that you get your withholdings back. And so I encourage anyone who had any kind of income, and that includes wages, self-employment income, dividends, interest bearing accounts, as well as capital gains, any kind of income, no matter where derived, you would want to go to your local Liberty Tax store and talk to those tax professionals and tax experts there to see if there's an advantage for you to file, but also if there's a filing requirement for you to file. And that's a great question because a lot of people, I get people asking me all the time, what about my student dependents? Well, first of all, dependents are relatives and people that can be claimed on a taxpayer's tax return. And a lot of that is typically children. And children sometimes have jobs where they make money. And I'll give a personal example. My daughter, who I claim on my tax return last year, had a summer job and earning income, and she received what's called a W 2 from her employer. A Form W 2 is a form that the employer provides to the IRS to tell them your salary that you earned or your wages that you earned for the year, as well as the income tax withholdings and also Social Security and Medicare withholdings that they're required to remit on behalf of the taxpayer. Well, my daughter came up to me. She goes, Dad, do I have to file? And I looked at her return and said, No, baby girl, you don't have to file. But you know what? Maybe we should file because that means you're going to be able to get all of that withholdings that are on your W 2 back to you. And that's something that you as a taxpayer you're owed that money back because it wasn't taxed. It was not required to be taxed because your income was lower than the standard deduction. So what we did is we filed, her mom and I filed our return, and then we filed a separate return claiming that income on it and also the amount of withholdings, and she got a refund back. So it was a great day for her because she got a little extra coin in her pocket, and we were able to explain to her as an up and coming taxpayer on what's required to file a tax return. Do we have any other questions? Okay. All right. Well, I'll tell you that working in tax is terribly interesting. And I say terribly interesting because whenever I tell people stories at my kitchen table, they get bored. But I love it because it's so interesting to me because tax tells the story of a person's life. You can see what their interests are, you can see what they care about, who they love, what their aspirations are just by looking at a tax return. And then when you get into the tax code and you look at all the taxes that are out there, you look at that and see there's a lot of ways in this world in which to earn income. So I think that's really fascinating. So I encourage you, if you have questions about your own tax situation, or if you have questions about anything tax, please submit them. You can also connect to us by scanning the QR code and or putting in the code book in the text in the live stream here. So go ahead and put your questions in the chat.
Okay, we have another question.
All right.
Nicole Thompson.
Okay, Nicole, what's
She
your question?
wants to know, how do I file taxes for my small business? Can Liberty Tax help me?
Oh, that's a great question. So the question was from Nicole was, can Liberty Tax help me file my taxes for my small business? Absolutely. That is something that we are experts in because we know there are a bunch of small business owners out there that really have questions about what it is they need to keep track of throughout the year, as well as what they have to report on their tax return. So, the way that a tax return works for a small business, if you're a small business, that means you're self employed. That means that if you earn income more than $400 throughout the year, you're required to report your business activity on what's called a Schedule C. A Schedule C is just a form that goes on a 1040 of your individual return that reports all of your business income as well as any qualified, ordinary, and necessary expenses that were related to the production of your income. And that can mean there's a lot of bookkeeping that has to be done for a small business where you have to keep track of all of your income and all of your expenses related to your business so that you can report a true and accurate report of your business income and expenses. And that can get really overwhelming, especially for small business owners who are really struggling to take care of things for their business as well as all their clients. And so, what we encourage for small business owners like you, Nicole, is connect with your local Liberty Tax office and the tax professionals in that office because they can assist you with not only filing a tax return and that Schedule C, but also can help you get your bookkeeping in order so you can keep track of all your finances throughout the year that can assist not only with filing a tax return for your business, but also assist with your financing and other activities for your business. So, great question, Nicole. That's something that we're really excited about helping our clients out with.
Romy wants to know, if your son works, can you claim him as a dependent?
All right. So, the question from Romy is, if your son works, can you claim him as a dependent? Well, let's first talk about who can be claimed as a dependent. You can be claimed on a person's tax return if you're qualified as a dependent, meaning that you provided more support for them than anybody else and that they resided with you for more than half a year and also that they're not married. So the question here is that how old is your son and does he live with you for more than half a year and do you provide more support for him than anybody else in this world, including himself? Now, I will assume in that situation that yes, those answers are yes to all those questions. And what we have to ask then is, well, what kind of income did your son receive, Romy? Because if he received earned income, he's not necessarily required to report that on a tax return if it's less than the standard deduction for that taxpayer type as a single taxpayer. Again, in 2024, it was 13,000, a little over 13,000. So you don't have to report that income if it's less than that for your son. But if you want to claim your son on your tax return as a child for the child tax credit or the earned income tax credit, they have to meet all the qualifications as a qualifying dependent, which includes that if they're under the age of 17, lived with you for more than half the year, you provided more than half support, and they also have a social security number and they're not married, then you can qualify them to be claimed as a dependent on your return. Now, just because if your son earned that income, that doesn't mean that it has to be reported on your tax return. Let me be clear with that. If your son earned income, you don't have to report it on your tax return because that is their income and they have a separate filing requirement if they had income over that certain amount. So I don't know the specifics of your tax situation, but what I would encourage you to do, Romy, is that if you have a local Liberty Tax office, you can go to libertytax.com, find a local Liberty Tax office, and they can help guide you on whether or not it's required that he be reported on your return for purposes of claiming those credits, or if there's a filing requirement specific for your son. So that's a great question. Again, I get a lot of questions like that throughout the year.
Does Liberty Tax have workshops to educate the community about taxes?
Great question. I just got a question in that said, does Liberty Tax have a workshop to help educate the community about taxes? Absolutely. Our Liberty Tax franchise owners are out in their community. They're the local tax experts. And what they do every year is go out and do what's called tax talks. This is their opportunity to give back to their community because it's all about loving our neighbors and helping educate them about the taxes and how they apply to their situations. So we have tax talks on military, on tips, on small businesses, on rental properties. We got tax talks on almost every topic you can think of. And what I'd encourage you to do is connect with your local Liberty Tax office and see when they have their next scheduled tax talk available. And also, libertytax.com has a lot of great information on there as well about the things we just talked about.
What's the difference between an early filer and a late filer?
Oh, that's a great question. So the question that came in was, what's the difference between an early filer and a late filer? Well, really, that's just describing when the taxpayer prefers to file their tax return. So there's no time that's necessary for you to file a tax return except for those dates when the start of the season starts and the filing deadline comes up. You can decide to file at any time between then. The most important thing is that you have all the documentation necessary to file a true and accurate tax return. So if you don't know what those documents are like a W-2 that you receive from your employer. It's 1099s that you receive from financial institutions like banks and also investment firms. You can also, if you have a small business, as soon as you have all of your income for the prior year tallied up and you have all the qualified expenses for deductions for your business available as records, you can go and file with the tax professional. And so what we say is that whenever you can and are ready to file, go ahead and make an appointment by going to libertytax.com, finding your local Liberty Tax office, and filing or scheduling an appointment to meet with them. My recommendation for every taxpayer is as soon as you're ready to file, file. Why is that? It helps protect you. There are hamsters out there that are trying to file tax returns, they're fraudulent tax returns, and they steal people's identities in order to file those returns and request a refund. And if that happens to you, that means that if you go to file your tax return, it's going to be rejected by the IRS because they've already received a tax return with your social and identifying information on it. And that's a really hard thing to go through because now you have to prove to the IRS that no, you're the legitimate person claimed on a tax return. And there's a whole process by which you go through and claim you had stolen identity and then receive an identity protection pin. That is a really hard thing to go through. And of course, our Liberty Tax offices assist you with that process and can help get you rehabilitated so that that doesn't happen again. But the best way to protect yourself from that happening in the first place is to file as early as you can because the first in time is the one that the IRS will accept. So really great question. And of course, we at Liberty Tax are here to help you in those situations.
Okay, Nicole wants to know, my refund was higher during COVID, but even though my income hasn't changed much, my refund dropped. What can I do to get a better refund?
All right. So Nicole asked a great question, which was during the COVID period, which was tax years 20 and 21, she had a higher refund on her taxes than what she's had recently, even though her income has stayed the same. And that's very common because the tax laws change from year to year. And especially during COVID, there was a lot of tax benefits that were being passed by Congress and the IRS was administering to help people during that crisis. And so a lot of people received big refunds during those years because there was the COVID recovery rebates that were going out that were helping individual taxpayers and families bridge that time whenever they otherwise may not have been able to work because of the pandemic. So what happened is after those periods passed, those special tax laws that changed during that period to help people did not continue on. And so the normal tax laws came back into effect with the Tax Cuts and Jobs Act. And that means that the refunds may have gone down. Now, that doesn't mean that you're missing out on deductions and credits you may not know about. So what I encourage you to do, Nicole, is if you have an opportunity to go and see your Liberty Tax expert, they can review your prior year returns and do a double check on those to make sure that you did not miss out on any credits or deductions that you could be entitled to, and to make sure you receive all the refunds that you're entitled to. So that's that double check that we do to give our customers and our clients the value that we can bring as their local experts. That's a great question. Oh, and something else, Nicole, that I just thought of is that if you want to make sure that you receive a refund by next tax season, what your local Liberty Tax expert can do is sit down with you and advise you on the amount of withholdings that you need to have in your paycheck every pay period, or if you're self-employed, how much you need to pay in quarterly estimated taxes to ensure that you have enough to carry your tax liability and you get the refund that you want to see whenever you file your taxes. That's another benefit of going into a Liberty Tax office. We've got a calculator and a tool right on our website to help you with those calculations for your W-4.
No other questions at the moment.
All right. Well, I think we are waiting for some more questions. Great questions so far. I'm so excited to be able to assist you today as your local Liberty Tax expert. Again, my name is David Delaney, and I work here at Liberty Tax, and I am all things tax. So please ask me your questions. One of the things I was talking about earlier is the credits and deductions that may be out there that you may not have heard about. Well, did you know there's a credit for having a clean vehicle? I'm not talking about clean as in is it dirty or did you take it to the car wash. I'm talking about an energy efficient vehicle. There's certain vehicles that if you buy them and it's a qualified vehicle, you can receive up to a $7,500 tax credit for that. Just think about it. If you bought a new vehicle last year, you may be eligible for a tax credit for it. Even used clean vehicles, clean energy vehicles, are eligible for the tax credit up to $4,000. So that's one of those credits that people, as they're buying electric vehicles or hybrid vehicles, they may be eligible for a credit, and that's something that your local Liberty Tax office can help you decide and determine. Additionally, there's a residential clean energy credit. So if you're a homeowner and you bought some new solar panels or you got a heat pump that helps your house become more efficient, then what can happen is that you can deduct up to 30% of the costs of bringing that home into the future and having energy efficiency within that home. That can be a benefit for you as well. So I encourage you to, if you have any questions about things you've done to your house that may improve the energy efficiency, or you buy a clean energy vehicle, that's certainly something our local Liberty Tax offices can help you with.
Okay. Another question. Do we have to report stock options? And also, I guess you can answer this one as it's a quick question. Does Liberty Tax work in Canada as well?
All right, so 2 questions, and I'll start with the first one, which is easy, which is, does Liberty Tax operate in Canada as well? Well, look behind me here. We have Liberty Tax and we have Liberty Tax Canada with the maple leaf there. Yes, in fact, we have about 2,000 offices across the United States and about 400 offices across Canada. And if you're in Canada and you have questions about taxes here in the United States, guess what? Your local Liberty Tax offices in Canada can assist you with your U.S. tax returns as well. So that's a great benefit of having an international company like ours. We can help clients everywhere. All right, and then the other question we had, which was, I forgot what the other question was.
Do we have to report stock options?
Oh, the question is, do we have to report stock options? So first of all, let's talk about what a stock option is in the first place. A stock option is an opportunity to buy a company stock at a certain price in the future, or to sell, it's called a put or a pull, on a company stock at a future date. So what that means, so the question, as I understand it, would be, if I have a stock option and I actually purchase that stock or I sell that stock and I had some income from it, do I have to declare that? Well, again, you have to, as a taxpayer, you have to report all income, no matter where derived. That means no matter where in the world it came from, and no matter how you received it, that income is therefore has to be reported on a tax return if you're required to file a tax return. And a stock option, if you bought a stock at that option price and then ultimately sold it for a higher price, you have what's called capital gains. And capital gains get reported on Schedule D of your tax return. And ultimately, you pay a different tax rate on that than you do as an individual for your individual tax rates. So it usually, capital gains gives you an advantage, is that income does not get taxed as much as your wage income does. So that's a great thing. But yes, if you have questions about whether or not that stock option that you had resulted in a capital gain and therefore gets reported on your tax return, I encourage you to go to your local Liberty Tax office. They can take a look at that 1099. Usually it's a combined form 1099 that your financial institution provides with all of your stock transactions throughout the year, and they can help you calculate if you had any capital gains or you had any capital losses. Now, capital losses should be reported as well, because sometimes you can take those against your wage income that's reported on your tax return. So again, reach out to your local Liberty Tax office. They can review those forms and help you decide if you have any capital gains or capital losses that need to be reported. Great questions. These are really good. So I can talk about, just explaining about those capital gains. It's an amazing thing whenever you receive a packet in the mail and it has a list of hundreds of transactions that happen throughout the year. And those transactions, every single one of them are reported to the IRS if they're on that 1099. So you actually have to report the same information on your tax return. And it can take a long time to list out all those transactions. And that could be onerous. And so if that's your situation and you just don't feel comfortable doing that, or you don't even want to have to worry about it, that's what's helpful about our Liberty Tax offices, is that we can take that burden off your shoulder. We can get that tax return calculated and have all those transactions reported on there accurately so that you don't have to worry about it, and you can rest easy at night and not have to worry about taking your taxes in your own hands. You can put it in the hands of our local Liberty Tax experts. Any other questions?
I'm a W-2 employee and my husband is 1099. How do we file our taxes?
Okay, question was, I receive a W-2 as an employee and my husband receives a 1099. How do we file our taxes? So let's explain what a W-2 is and what a 1099 is. These forms are called information reports. These are documents that an employer, if they're reporting a W-2 for their employees, are sending to the IRS. And 1099s come from financial institutions or from other businesses reporting financial information to the IRS and also to the taxpayer. And so what happens is whenever you receive a W-2, that reports your wages as well as any income tax withholdings and Social Security and Medicare to the IRS and also to the taxpayer, so that whenever you file your 1040, your tax return, and you report that W-2 information on there, that information you submit on your 1040, the tax return, is going to be checked by the IRS to make sure it matches what the employer reported on your behalf. That's a way of making sure that your tax return is accurate. Same thing for 1099s, except for 1099s, these aren't for employees. These are for independent contractors or for miscellaneous type income that goes to individuals that's not related to an employment situation. And so the situation, as I understand, is these two married spouses, married filing jointly taxpayers, one's filing a W-2, which is an employment situation, and 1099 whenever they're non-employment compensation. What you have to realize is that there are certain deductions that apply to 1099 that would not apply to a W-2 employee. Let's talk about that for a second. Say, for instance, you both work from home. If you're a W-2 employee, you cannot deduct the expenses of operating your office out of your home. Even though you may have electricity charges, you may have rent that you pay, you may have other services like internet that you have to pay for. As a W-2 employee, you would not be able to deduct those expenses against your wage income. But if you're a 1099 employee, you may be able to deduct those expenses for the business use of your home, as well as if you have any mileage that's required for you to be able to perform your services or to sell your goods as an independent contractor. So there's deductions that 1099 non-employees can take that W-2 employees cannot. And so that can be very confusing. And that's why I encourage anybody who has W-2 and 1099s to give a chance for a local Liberty Tax office to be able to guide you on how to report that accurately, and also take advantage of any of the authorized deductions that result from the business use of a home or the business use of a vehicle or the business use of any supplies or utilities or maintenance or marketing or legal fees or professional fees. It can get overwhelming. That's why we encourage you to go to your local Liberty Tax expert. Great question. All right, well, there's no more questions right now, so that gives me an opportunity to explain about business use of a vehicle. Whenever you have a business, such as a 1099 non-employee compensation that you receive, whenever you have a small business, you're able to take a deduction for any ordinary and necessary expenses related to the production of your income. Some of the times that includes what's called dual use property. Whenever you use your cell phone or your own car in order to conduct your business for your small business. Well, whenever you use those items for your business, you can deduct the expenses related to them. But how do you know how much you can deduct? Well, what a local liberty tax expert can do is they can help guide you through how much of that dual use property was actually used for your business income. So, for instance, if you had a cell phone and you had clients you had to contact on a regular basis, we can help you understand how much of that cell phone bill can be deductible as an ordinary and necessary business expense. In addition to that, if you have a vehicle and you're driving it for your small business, you may be able to deduct the actual expenses related to the use of that vehicle, such as gas and maintenance and any kind of repairs that you have on it. But also, if you don't want to keep all those receipts, there's a thing called a standard mileage deduction where you get to deduct a certain amount per mile as long as it's a mile that was driven for your business. And what we encourage all small businesses, including those who receive 1099s, non employment compensation, NECs, we encourage you to keep records of all the income that you receive, as well as records of any expenses or any miles that you drove for your business, because that will allow your local Liberty Tax office to maximize the amount of the ordinary and necessary deductions for your business expenses. That way, we ensure that you pay no more than what's required by the tax law, but also to maximize the refund that you may be entitled to. So, encourage you to keep records of any business income or business expenses throughout the year so that whenever you meet with your tax professional, they can help guide you on that Schedule C that you have to report. Any other questions? All right, so we have gotten some questions about the earned income tax credit. Again, I talked about this at the very beginning when I was talking about tax credits, but the earned income tax credit is one of the most favored tax credits out there. Millions and millions of taxpayers are eligible to claim the earned income tax credit based upon the amount of income that they receive for the year, as well as the filing status that they have, as well as the number of qualifying dependents that they can claim on their return. So a lot of the times I get questions on how do I maximize the amount of earned income credit that I can receive? Well, first of all, let's think about what are the qualifications for earned income credit. First of all, as the name describes, you have to earn income in order to qualify for the earned income credit. But there are limits on the amount of income that you can receive. And there's also minimums for the amount of income that you receive in order to be qualified for the earned income credit. So for filing status of single with no qualifying children, the maximum income that you can receive for the year in order to qualify for the earned income credit is $18,951. If you have one qualifying child, it goes to $53,057. Again, if you earn more than that amount, you're not going to be qualified for the earned income credit. If you have two qualifying children as single, head of household, or widowed, again, this is $59,187 for two qualifying children. If you have three or more qualifying children, it's $63,398. If you're married filing jointly and you have no qualifying children, it's $25,951. One qualifying child is $59,187, and two qualifying children is $65,398, and three or more qualifying children is $69,518. I know that was a lot of numbers, but what that means is that there's income limitations. You cannot earn more than this amount that we just talked about in order to qualify for the earned income tax credit. Additionally, the qualifying children that you get on your return also can increase the amount of earned income tax credit that you receive, and also increases the amount of the income limitations for the earned income tax credit. So what's a qualifying dependent for the earned income tax credit? Well, that's a qualifying dependent is a person that's related to you, that lives in your home for more than half the year, that you provide more support for them than anybody else, that they're not married, and also that they have a social security number. If your dependents meet those qualifications, then you can have them claimed on your return as a dependent and may be able to maximize the amount of earned income tax credit you receive. Now, I get a question all the time: what is the maximum amount of earned income tax credit that I can receive? For tax year 24, the maximum amount of earned income tax credit you can receive, this means you have the right amount of income and you have three or more qualifying children that you can claim on your tax return, then that means that you would be able to receive an earned income tax credit of up to $7,830. That's a lot of green in your pocket. So that's a great credit for you if you qualify. Now, one of the questions I also get is that, well, how do I know I'm going to receive the maximum earned income credit? Well, first of all, again, as I've said many times, go to your local Liberty Tax office, because your local Liberty Tax experts can help you determine how much how much you can earn as an earned income tax credit. Additionally, the IRS has a great tool called the EITC Assistant. It's a link on irs.gov that you can go to, and you can put in your specific tax situation. It's going to ask you some questions, and then it will give you an estimate of what you can expect whenever you file for the earned income tax credit. Encourage you, if you go to that, please bring in that information to your local Liberty Tax office so that we can qualify you for the earned income tax credit and make sure you get the maximum amount of refund that you can get under that credit. Any other questions on the earned income tax credit?
Not only earned income, but it says, does Liberty Tax still do the appreciation weeks in March?
Yes. Okay. So this is a great question. The question is, does Liberty Tax have its appreciation weeks in March? This is something that we do every year where we provide discounts for military, first responders, teachers, and medical professionals like nurses. We do this because we, again, want to love and appreciate our neighbors and for those servants in our communities that help the local communities. And so, yes, we do the appreciation weeks all throughout the month of March. And I encourage you to go to libertytax.com and also follow us on our social media. And you can do that by scanning the QR code that's on this live stream here today. And we will be promoting those discounts during the month of March for those local, community servants that we talk about for the appreciation months, to be able to apply a discount for them to get taxes done with their Liberty Tax office. So thank you for that question, because I haven't told you this, but I'm a veteran and served 20 years in the military myself. And so that's something I very much appreciate that Liberty Tax does, is helping our service members get a discount on their tax returns. Okay, we have 10 minutes left. So again, if you have a question, I would love to be able to help you with that. One of the things that I want to share with you while we're waiting for other questions is I'm giving out a lot of information here today, and I know a lot about taxes, but guess what? Not any single person knows everything about taxes. Why is that? Well, if you look at the Internal Revenue Code, this is a federal tax code, and if you read every single word in it, it would be over 1,000,000 words long. In addition to that, there's thousands and thousands of regulations that expand upon what the Internal Revenue Code talks about. Even on top of that, you have all the instructions and publications that the IRS sends out to taxpayers to help explain what the regulations mean. And then, of course, you have tax laws that are written by courts in various different jurisdictions explaining what those ambiguities in the tax law may actually mean. It can be incredibly, incredibly confusing. So, as a tax attorney, I've spent more than a decade now reading through all of that and studying it. And even I don't know everything about taxes. What's great about being in a Liberty Tax office is that even if the tax preparer that you're working with does not know the question that you're asking, or does not know how to file the return that you're asking them to file on your behalf, they have a whole network of 2,000 offices, including here at the corporate office, of a tax support center filled with super tax professionals that answer thousands and thousands of tax questions every single tax season. And so you have a brain trust of tax professionals throughout the nation that's sitting with you in that office, whether they're present there with you or not, because they can reach out and help you in any of those tax situations that you have. So that's what's great about coming into Liberty Tax office, is that you got the power of this brand behind the persons that are in that office that can answer any tax question and file any tax return that applies to your situation. So please ask your questions now. And if I don't know, I will tell you, I'm sorry, I don't know, but I know somebody I could reach out to and find out. And I encourage you to go into a Liberty Tax office and ask that question, because I'm sure that we can help you in that situation. All right, no more questions. I think we have a few more minutes, so I'll wait here. Um, this is my opportunity to pontificate on anything tax. So I'll tell you some of the more interesting things I see happen in tax situations for taxpayers. Rental property. That is something that can trip up a taxpayer more than anything I've ever seen. Because as a rental property owner, if you own property and you rent it out for the production of income, it's considered a business and you report it on a Schedule E. Well, that Schedule E can get really complicated very quickly because of a thing called depreciation deductions. You get to deduct the depreciation of your property. And what depreciation is, a recognition by the IRS that things wear out over time. And therefore, the value that you bought it at may not be the value that it is later on because it's degraded over time. And there's depreciation schedules that you have to keep track of on your tax return because what the IRS says is that you have to take all deductions allowed for that property on your tax return. And if you don't claim those deductions, guess what? You're going to have to pay anyways whenever you go and sell that property because there's a thing called depreciation deduction or depreciation recapture. So that whenever you sell that rental property, you actually have to include all of the previous tax deductions you took for depreciation or were allowed to take for depreciation deductions as income on your return. And I had a situation with a taxpayer that sold a rental property, and whenever he sold it, he came to me, and I was thankful I had this opportunity. He came to me and said, David, I sold a rental property. How much should I keep just in case to pay for taxes? I said, well, you're going to have capital gains taxes if you had income off of that, if you actually made money off of the sale, and we can help you calculate that. But you're also going to have depreciation recapture. And he's like, what's that? And I explained exactly that it's the depreciation deductions that you were allowed to take prior are going to be included in your income. So we did calculations for his capital gains and also for his depreciation deductions that he took on his rental property. And I said, that's how much you need to set aside and hold in your bank account because you're going to end up having to file that on your tax return and paying that. Sure enough, whenever we did his tax return later on, he owed $40,000 on his tax return. And luckily, he had all that money in his bank account in order to pay that tax bill. So luckily, I was able to get to him in that situation. But I've certainly done tax returns for clients who had rental property that did not claim the depreciation deductions. So they didn't get the benefit of those deductions when they filed in the prior years. And then whenever they sold their property, they didn't know they needed to pay all that back or include that in their income. And there was a huge tax bill that they weren't prepared to pay. So that's why I encourage any taxpayer, if you have a major financial transaction happen during the year, you should probably contact your tax professional, your local Liberty tax expert, to talk about what the implications are going to be for you whenever you go to file your tax return that next following spring. So I encourage you, if you have any major financial transactions or you've gotten married or had any major life circumstances occur, I encourage you to reach out to your local Liberty tax office because they can assist you in understanding what that means for your tax situation when you go file in this season and the next. So again, I encourage you to reach out to Liberty Tax, follow us on our social media by clicking on the QR code that you see there on screen, as well as putting code book into the appointment so that way you can make sure to get all information that we put out through our social media.
The QR code will actually take them straight to booking an appointment.
Oh, and that's fantastic because the QR code, I just was told by our media manager, she told me that QR code that you see there will take you directly to book an appointment with your local Liberty tax office. You don't even have to go figure out where that person is or where that office is. It will take you directly there based upon your geolocation and the QR code. So that's really helpful. Thank you for providing that information. We'll give it just a few more minutes.
Nicole wants to know if Liberty Tax does my taxes, can I get one of those suits?
Love this question. So the question came in from Nicole. She says, if I get my taxes done at Liberty Tax, will I get one of those suits? Well, this is my money suit. And I wear this for special tax occasions because a tax return may be black and white, but it's really all about the green, right? So that's why I wear this money suit to spread the cheer of tax season because we know that a lot of our clients that come into Liberty Tax offices get a huge refund, and that's a great thing for our clients. So we're glad to help you and assist you with that. But unfortunately, this is a one-of-a-kind suit that I bought, and I'm sure you can find it as well. But I'm not going to be giving away my suit. This is my special tax season suit. All right, so we have 2 minutes left, and I'll shut my mouth and allow you to ask any questions for the next 2 minutes. Okay, well, if no one's going to ask a question, what I'm going to talk about next is state taxes. Did you know there's 9 states in the United States that do not charge an income tax to their citizens and their residents? Think about that. That means there's 41 states that require their citizens and their residents to file a tax return claiming all of their income derived no matter in the world where it was made from. And so states can get really complicated when it comes to taxes because you have your federal income tax that you owe, but you also may have a state income tax filing requirement as well. And just because you were able to take a deduction or a credit at the federal level doesn't mean it necessarily applies at the state level. There's sometimes when they don't flow together. And so it can get really complicated for whenever you have state filing requirements, especially if you moved. If you moved from one state to another state, you may have a filing requirement in both states. And so that can get really complicated in a hurry. And we encourage you, if you have a state filing requirement, that's what's great about our local Liberty tax offices is that they're in your neighborhood. They know your state, they know your city, they know the taxes that apply for your activities throughout the year, and they can assist you with those state tax returns. So we just have 30 seconds left. If there's another question.
When is the deadline to file? Let's remind them of that. And also, Wise said she loves the crown, learned a lot from it. So let's just remind them of the deadline.
Yeah, so just a reminder about the deadline. It's coming in just a few short weeks, just about 12 weeks away. It's Tuesday, April 15th. You have time to get it done, but I encourage you to file as soon as you're ready. So thank you so much for joining us for Liberty Live today. I'm so grateful to be able to answer your questions. Thank you so much for joining us.